So normally we do audit of all balance sheet items, P&L items, financial statements, audit of financial statements. Now, exclusively we do in specific cases where large quantity of fixed assets are there and specific request of management, exclusive fixed asset audit is done. We normally call it as FA audit. So why FA audit is done? Some of the companies, one is capital intensive companies, another is labor intensive companies. In labor intensive companies, their major investment will be in form of labor. Whereas in capital intensive companies, major investment will be in fixed assets like plant, machinery. Which are the fixed assets? Land, building, plant, machinery, furniture, fixed assets, furniture and fixtures. So each of those items, if the value of fixed assets is very huge, then exclusively audit of fixed assets is done. That's called FA audit. Now, FA audit, each of the fixed assets, various columns will be prepared, and most of the companies, most of the entities will have their own softwares designed specifically for FA audit, or designed specifically for taking the inventory of fixed assets. It is not the word usual inventory. The word inventory is used globally. In India, the word to take stock, the word inventory refers to goods. That is stock of raw materials, inventory of raw materials, inventory of work in progress, and stock or inventory of finished goods. Whereas many cases when you go for audit, many a time you come across the word, we have to take stock of fixed assets, we have to take inventory of fixed assets. So basically you should not go with the normal meaning. What is the normal audit meaning for stock? Or in India, for a audit meaning, stock means stock of, or inventory means stock of raw materials, stock of work in progress, stock of finished goods. First, raw material will go into process, then work in process. In term, it may be 50% finished, or it may be 75% finished. Then we call work in process. Once the finished product is completely finished, ready for selling, then we use the word finished goods. So basically, whenever you go for audit, they may use the word stock of, we have to take stock of fixed assets, inventory of fixed assets, because it's a global word that is used. It does not mean stock of raw material, it does not mean stock of work in process, it does not mean stock of what is that, finished goods. Basically, we are talking about, we have to look into or check, or we have to verify the fixed assets. That's what they are actually telling. So now fixed assets audits. Let us take a sample company. Now in that sample company, the company might have its own software, or the auditor may use a particular software. Now, whatever software is being used, that software basically will be used to generate a barcode. When we go for fixed asset audit, we normally use the words tagging. Tagging of fixed assets. What exactly is tagging of fixed assets? Do we take a tag and tie it? So once upon a time, maybe they would have done it, but as of now, what is done everywhere as of now means from so many decades. Once upon a time, maybe labeling might have been done, or a paper, take a paper, paste it on the or take a sticker, paste it on the what is that, fixed assets, write it manually when softwares were not there. This is a age-old process. Now what tagging means, normally what is being done, a barcode is generated. Tagging means a barcode is generated, and that generated barcode will be pasted on the fixed assets. So with a barcode reader, we can make out many details relating to fixed assets, that particular fixed asset. So what are the columns? Normally we prepare multiple varieties of columns will be prepared, so that various details relating to that particular fixed asset will be entered. Then barcode is generated. So entity will have a software many a time. Auditor normally will prepare various columns in Excel sheets. Excel sheets data entry will be there from the auditor side, and from the company side, whatever software they're using, that software, all the data will be fed. After feeding the data, barcode is generated. That barcode sticker is pasted on the fixed asset. So till now, whatever we have discussed, take a minute, write down notes. All of you written? Hello?
Yes, sir.
Okay,
Yes, sir.
let's continue for the serial number. So see, each of the entity will have its own softwares, and column headings may be different from entity to entity. For a manufacturing industry, for a software company, for a hardware, for a cement manufacturing company, or any other, for a BPO or for a KPO. So it depends on entity to entity. Column headings may be different for fixed assets schedule. Fixed assets, details of fixed assets, what we are going to capture and what we are going to enter. Now, one sample company will take, and that is serial number. First column. So we will enter in our Excel sheet, and we will also enter in, auditor will enter in Excel sheets, as well as auditor will enter in that software which is maintained by the entity. Serial number. What is that serial number? Any product which you purchase, it will have a serial number. It is not the invoice number. Serial number and invoice number are different. It is not the invoice number. Not invoice number. It is serial number. So what is serial number? Many a time it will be mentioned as SN. SN or S slash, they'll just mention the number. So basically, every product that is manufactured, when you even for example, when you purchase a laptop, when you purchase a mobile phone, or when you purchase any product in general, box, outside the box, it will be mentioned serial number. Serial number is not the invoice number. Invoice number means you are purchasing a product. When you are purchasing a product, when the entity is purchasing a product, invoice will be generated. For the entity, it is sales invoice. For the purchaser, it is purchase invoice. Purchase invoice number is not, we are not talking about. We are not talking about that number. In the purchase invoice number, purchase invoice, this serial number will be mentioned. This is mentioned normally outside the box. If whenever whichever fixed asset is being bought, or any product that is being bought, it will be mentioned. That is the serial number given by the manufacturer. This serial number normally is given by the manufacturer. Or suppose a person is importing the goods and selling the goods, that serial number might have been given by the distributor. Possible. Most of the cases, serial number will be given by manufacturer. Next, we may have we have physical ID. What is physical ID? See, we can give any name. See, column headings, depending upon entity to entity, software to software, column headings may be different. Column names, nomenclature may be different. Physical ID. What is physical ID? It is given for every asset we are doing the audit. Every asset we are taking into consideration. That fixed asset, manually it is given. It can be any number. It can be month, date, year, then some number. So let us take, we have to see the entity is following which method. It can be something like year, month, date, year, month, DD, so month, date, year, they may be following, or date, month, year, then asset number 1, or asset number 1001, or asset number 10,001. So the starting asset will be given particular number. After that particular number, continuous numbers will be given. It will not be random numbers, it will be continuous numbers most of the cases. If there is a automated number generation software, then automated number generation may be used. But normally, most of the cases, it will be a continuous number, and that continuous number is given by the auditor. This number is given by the auditor, physical ID. You can call physical ID, or you can call any other name, but this number is given by the auditor, so that this number, this asset we have verified, this asset we have seen, this asset is in existence. So this was checked in this particular month, this particular date, this particular year, and we have given the number so and so. That's what physical ID means. We actually have seen this asset. This asset is in existence. It is real. It is in existence. And this asset we have checked, we have seen in this particular month, this particular date, this particular year. And this is the number which we are allotting. This number is allocated by auditor. So this we call it as physical ID. Just take a minute before going further. Jot down notes. What is serial number? What is physical ID? Serial number is given by manufacturer. Physical ID is given by auditor. Take a minute, jot down notes. All of you written?
Yes, sir.
Yeah, anyway, it will be uploaded in WaterBlissAir World web portal. So you can again see and make down notes. So use date. What is use date? Normally, when we go for fixed assets, the word use date has relevance. Why it has got relevance? The date on which the fixed asset is put to use. What is the difference between a fixed asset and current asset? Current asset is meant for short term, will be there for short term, whereas fixed asset will be there in the entity for a very long time. It is used for generating the revenue and it will be in existence for a very long time. Now, one is assets which we have brought, that is date of purchase, date on which we bought. Another is use date, when the asset is actually put into use. So now the question is, depreciation, should we calculate from the date from which it is put to use, or from the date from which it is bought? Let us assume the life of the fixed asset is 10 years. So the question arises is, should we calculate depreciation, diminution in the value of the fixed asset? Depreciation can happen in two ways. One is passage of time, that is, it may become obsolete. That means with the machinery, let us assume a machinery, with the machinery we may not be able to manufacture. Even if we manufacture, the product may be out of date. So we bought a fixed asset, we bought a plant and machinery, we didn't put to use, we didn't manufacture. After 10 years we want to manufacture, but nobody will buy the product. It has nobody will buy the finished goods manufactured from the fixed asset machinery. Then in such case, even though it is not put to use for a single day, it is completely depreciated. So depreciation happens because of two things. One is because of usage, wear and tear, because of passage of time. So now we are talking about use date. So this is required to apply which method of depreciation we have to use, or other things to calculate physical life, all those things. Use date means what? The day you might, the company, the entity might have bought the fixed assets 5 years back, 2 years back. We are not talking about that. It is put to use from which day. Suppose a fixed asset is bought, it is not put to use at all. Then the management can ask, the management, higher level management can ask the lower level management, why the asset is not put to use for 5 years, for 10 years. If it was not required, what was the need to purchase? See, anything that is usable to the entity, that only has to be bought. Suppose you have not used the asset at all, you have not put the fixed asset for use, then why it was bought in the first place? So use date has got relevance in many ways. That budget we could have planned for other things. So that is the importance of use date in FA audit, the day on which the fixed asset is put to use. Then we have voucher date. What is voucher date? That is purchase voucher. The entity has bought the fixed asset. It has got an invoice, purchase invoice or purchase voucher. That voucher date So voucher date to use date, is it same? Is it different? If it is different, why it is different? Why it is not put to use? All those calculations management can do. This is basically very, very important in capital intensive companies. Capital intensive companies, their major investment will be in, not in manpower. Their major investment will be in fixed assets, whether it can be plant, machinery, building, factory, of that sort. So use date will have more relevance in capital intensive companies, because huge budget, huge expenditure will be, fixed asset expenditure will be there. So one is voucher date, that is the date it is bought, purchase invoice date or purchase voucher date. Use date, the date on which it is put to use. Before going further, just jot down notes. All of you have written?
Yes, sir.
We can have one more column, that is category 1. Bhupesh, when you did the fixed asset audit, all these things were there, right?
Yes, sir.
Okay. So each entity columns can be different, names can be different. This is one sample company we have taken. Now category 1. Category 1 basically appears in outer column. We have category 2, that is inner column. So category 1, category 2, what it can be? Category 1 can be major classification. Category 2 will be sub classification. So this is major classification. Category 2 will be sub classification. So major classification, what it can be? Major classification can be like land, building, machinery, plant, furniture, fixed assets. Sub classification can be in plant or in building. Let us take an example of building. Sub classification can be what is that? Factory premises, or godown, or office. In classification of plant, we can have plant and machinery, we can have laptops, computers, desktop computers, other accessories. This can be one sort of classification. So category 1 is major classification. Category 2 is sub classification. Category 1 appears in outer column. Category 2 appears in inner column. So furniture and fixed assets, is the furniture and fixed assets, can it be a major column? Can it be a category 1 or category 2? Major classification or sub classification? Furniture and fixed assets, furniture and fixtures, that is major classification. In that sub-classification can be table, chair, something like that. So sub-classification will give further details. So another type of major classification can be office equipment. We are talking about major classification. So whether to classify it as major classification or sub-classification, that again depends on entity to entity. So major classification can be office equipment, testing equipment, lab equipment, computer systems. So this is the major classification. Sub-classification. What can be the sub-classification? For example, computer systems, if we take, computer systems is the major classification that will appear in category 1. Computer systems that will be appearing in category 1. So what can be category 2 sub-classification? Laptops, servers, desktops, accessories, that can be category 2. So computer systems can be category 1, that is major classification. In that, laptops, desktops, servers or accessories, something like that, can be category 2 sub-classification. Before going further, write down, jot down the notes. All of you written?
Yes, sir.
Now we can have description. What is description? So configuration or configuration, it can be any detail relating to the fixed asset, any detail which describes the fixed assets, that is description column will enter. For example, we take a laptop, whether it is a 15-inch laptop, 14-inch laptop, 10 inches laptop or 12 inches laptop, or it is having i5, i3 or i7 processor, is it having which type of GPU, graphic processing unit, which type of CPU, central processing unit, or processor type, GPU type, whether it is LCD screen, LED screen, battery backup, whether it is a 4-cell battery, 6-cell battery, Li polymer battery or Li ion battery. So any description that is related to that particular fixed asset will give. For example, if we take a table, is it what is the length, breadth, height? That is the description. Machinery, what is the manufacturing capacity of the machine? What is the power input that will take? How many units of production? How many units of production it is capable of doing? whatever related to that particular fixed asset. So description column, what we enter is any detail that describes the fixed asset, that will put it in description column. Then we have cost. What is the historical cost? Normally what we take is cost is historical cost. What is the purchase cost? What was the cost at which it was purchased as per the invoice value, as per the purchase voucher, or as per the purchase invoice. See, normally in fixed assets balance sheet, when we take, do we represent historical cost or depreciated value, or do we represent fair market? Do we reflect a fair market value, or do we reflect a replacement cost? What exactly do we reflect? Here we are talking about the cost. We are talking about historical value. What do you mean by historical value? Historical value means the price at which it was purchased. That is historical cost. What is replacement cost? Today, if you want to purchase, what is the price we have to pay for that? That is replacement cost. Normally, if you go to balance sheet, what is return on value or return on cost? Cost, original cost minus depreciation, that will give you return on value or return on cost. Book value, we also call as book value. Value as per books, that is book value. Historical value, the price, the cost at which it was purchased, that is historical cost. Normally, if you see the balance sheet of any company, gross book value minus depreciation, net book value will be outside, outer column. We have inner column, we have outer column in the balance sheet. In the outer column, net value will be there. In the inner column, you have gross book value, that is original cost, historical cost, minus depreciation. Normally in companies, straight line depreciation is followed. Company to company, country to country, it can be different. Straight line depreciation, for income tax purpose, we follow return on value method. Even for accounting purpose, return on value method can be followed. But the rate of depreciation will be different, may be different. Rate of depreciation for accounting purpose may be different from rate of depreciation as per income tax laws. Rate of depreciation, what is required as per income tax law, while calculating for income tax purpose, you have to apply depreciation rates as given under Income Tax Act and rules. Whereas for a company, depreciation has to be calculated as given under, as prescribed under sections of Companies Act. So normally companies, entities, for accounting purpose, one is bookkeeping, accounting, another is tax purpose, income tax purpose. Both are different. They may be same, they may be different. Normally it will be different. So companies, many a time they follow straight line depreciation. Some companies will follow return on value method. Both are possible. Whereas income tax, straight line method of depreciation is not permitted. Only return on value method is permitted. That too, depreciation rates has to be applied as given under Income Tax Act or income tax rules. Whereas for companies, straight line method is also possible. Depreciation, WDV method also is possible. Depreciation rate as per Companies Act, or there will be a way for formula for calculating WDV value. So for that, we use normally economic life, useful life, technical life, many other ways we will calculate. So based on that, depreciation is calculated. So basically, what we are talking about, cost depreciation. So are we talking about depreciated value, that is gross block, gross value of fixed assets, original cost of fixed assets, that is minus depreciation. Net are we talking about, or are we talking about historical cost? In this column, we are talking about historical cost, the price at which it was purchased. Before going further, jot down notes. All of you written?
Yes, sir.
Then we can have another column, quantity. Suppose the entity has purchased 40 laptops. Can we write, so that laptop, will it appear in major classification or sub classification? Category 1, or suppose we have taken major classification category 1, sub classification category 2. So major classification, computer systems, example. Sub classification, whether it is a laptop, whether it is a desktop computer, whether it is an accessory or something like that, whether it is a router or switch. Suppose category 1, category 2, major classification, sub classification. Now, so category laptop will come under category 2, that is sub classification, because major classification is computer systems. Laptop will take sub classification category 2. Fine. Now, quantity, the entity has purchased 40 laptops. So what we will write? Laptop, inner column. So how much quantity will write? Yeah, go ahead.
2, sir.
All of you?
Yes, sir.
Laptops will write, and will write 1 or will write 40?
40, okay, sir.
We have purchased 40 laptops. No, we will not write 40, we will write 1. Why?
Why, sir?
Each of the laptop will have a different serial number.
Oh.
For income tax purpose, for accounting purpose, it is different. Income tax purpose, what happens? Income tax purpose will take only gross block of assets concept. assets or fixed assets are divided into block of assets. Which are the block of assets? First block, is it land? Which are the for accounting purpose, which are the fixed assets? Land, building, furniture, fixtures, machinery, plant, right? Now for income tax purpose, which are the fixed assets, block of assets we are having? In accounting, many a time we do individually, whereas for income tax we dump everything into particular percentage depreciation based on depreciation. Now for example, if you take land, which block it will fall? 15% depreciation or 20% depreciation? Yes sir, anybody? Income tax, have you depreciated any land anytime? Land is always an appreciable asset. It does not depreciate. Whether it is fertile, non-fertile, all that doesn't matter. We are not talking about fertility of the land. We are not talking about whether it is saleable, not saleable. Normally, land is not an asset which depreciates. 10 years back, what was the cost of land? 100 years back, what was the cost of land? 25 years back, what was the cost of land? What is the cost of land as of today? So value of land, price of land will always increase. Land is not a depreciable asset. Land is an appreciable asset. So income tax, we never depreciate land. So what are the other assets left? The other assets left are building. Is it a depreciable asset? Yes, over a period of time, based on wear and tear, based on passage of time. Over a period of time, building depreciates, value of building depreciates. Repairs and renewals are required. After 50 years or 100 years, it has to be demolished and reconstructed. All that will be there. So building has got a life. It depreciates. Some buildings may be standing for 40, 400 years, 500 years, 1000 years. Stone constructed buildings, temples, or Taj Mahal, something like that, where it is maintained. But normally in real world, for factories or business assets, building is a depreciable asset. For income tax purpose, building is a depreciable asset. Now next, furniture and fixture, is it a depreciable asset? Yes, it is a depreciable asset. Machinery, is it a depreciable asset? Yes, it's a depreciable asset. Now what is plant? We are talking about quantity, but to understand that, to write that, all these things are required. Or it is not related to only quantity heading or cost related heading or other headings. It's all connected. What is plant? As and when it is required, we will keep talking about it. Plant, does it mean a tree, a small plant of a tree, or a small plant? In a house we'll have plants, or street we have plants, garden we have plants. Are we talking about that plant?
No, sir. Machinery.
What is a plant? We use the, so now what is a plant? See, what is a building? What is land? Land we know. Vacant plot of land, land we know. What is a building? Any superstructure. Any superstructure, we call it as a building. Any superstructure on a land, we call it as a building. Then what is furniture? What is fixtures? Furniture and fixtures, anything that is used for comfort to or storage or comfort, that can be considered as furniture. For example, a cupboard, you can store the things. Sofa, you want to sit, you have a person will sit. A table is used to work upon it, used for comfort or used for work or storage, that can be considered as a furniture. What is machinery? Furniture, cupboard, table, chair, can you consider as machinery?
No,
What
sir.
is machinery? Machinery is something which is used for manufacture. Any fixed asset which is used for manufacture, that we call it as machinery. So land, we know, vacant plot of land or land on which a superstructure is there, that is land. Building means a superstructure is there on the land. That superstructure we call as building. Furniture is used for storage, working, comfort, something like that. Machinery, any fixed asset that is used for manufacture, that is machinery. Then what is plant? Anything which is not a current asset, anything which is a fixed asset, that means fixed asset is used for longer time. An entity uses fixed asset for business to generate revenues over a long period of time. That is a fixed asset. First of all, it is an asset. It is a fixed asset which is used for a long time. It is not fixed to a particular place. Fixed asset does not mean it is meant for a particular place or fixed to a particular place. Car, is it a fixed asset?
No, sir.
Car is a fixed asset. Vehicle used for godown. We transport goods from godown to factory, production area, and production area to warehouse. All that, whatever vehicles are being used, those vehicles, is there any movement? Yes, there is movement. So is it fixed asset? The word fixed asset does not mean fixed to a particular place. No, that's not it means. The word fixed asset means used in the business for a very long time to generate revenues. That's what fixed asset means. Asset which is not a current asset. Current asset is meant for very short time. That current asset will be there with us for a very short time. Whether it is debtors, whether it is stock, whether it is stock of raw materials, work in process, finished goods, or whatever. Then that stock of raw materials will become work in process. Then work in process will become finished goods. Then finished goods will sell or will throw it if it is not saleable. So current assets will be there with us only with the entity for a short time. Fixed asset will be there with the entity for a very long time. It will be put to use to generate revenues, and it will be there in existence with the entity for a very long time. That is what a fixed asset is. Fixed does not mean it is fixed to a particular area. Fixed asset means which is there for a very long time, which is there to generate revenues. Now, we are talking about quantity. Now we are talking, before that, we are talking about plant. What is plant? Is it a fixed asset? Yes. Is it used for long time? Yes. Is it used to generate revenues? Yes. What is plant? Is it a plant we are talking about in the garden of the factory, a garden of the warehouse? What do you mean by plant? Any fixed asset which is not land, any fixed asset which is not building, any fixed asset which is not furniture, any fixed asset which is not machinery will be classified as plant. For example, a car or a van used to transport goods from factory to warehouse, warehouse to factory, godown to factory, factory to godown. That van, is it a fixed asset? Yes. Is it land? No. Is it building? No. Is it furniture? No. Is it machinery? Is it used to manufacture? No. Then what it is? So it is plant. So anything, any fixed asset which is not any of other things, residuary category, that is plant. So now let us come back. 40 laptops we bought. That example we will continue. So all these discussions may not be connected only to one particular column. All other columns which we previously discussed, many of the columns the discussion what we had just now are related. Now quantity 40 laptops we bought. That laptop, is it land? No. Is it building? No. Is it furniture? No. Is it machinery? Does it manufacture anything? No. Suppose it is manufacturing, it is creating a software. Can we call it as manufacture? So normally it will be classified under plant, equipment. Anything that is used to production, anything that is used for production, anything that is used for manufacturing, that is called machinery. So anything which is not fitting in any of the varieties will be considered as plant. Now laptop in the general category, plant or equipment will consider it. Now this laptop, 40 laptops we bought. In the quantity column, should we mention 1 or should we mention 40? We have to mention only 1. Why? Because each of the laptop serial number will be different. Each of the laptop configuration may be different. Suppose we take 4 laptops. 4 laptop, each of the laptop, same configuration. Processor, i3 processor, or i5 processor, or i7 processor, touchscreen or not touchscreen. Same configuration it may be there, but serial number will be different. Because serial number will be different, what we will do, we will make separate rows of it. We will mention serial number so and so. We will mention serial number so and so, physical ID so and so, user voucher date so and so, major category computer systems, subcategory laptop, quantity will write 1. Whereas for income tax purpose, whatever depreciation rate, we classify the block of assets. In land is not a depreciable asset, so building will be there, furniture and fixtures will be there, plant and machinery will be there. So in that, based on depreciation rate, for example 15% depreciation rate, whatever depreciation rate, 5% depreciation rate or 15% depreciation rate, year to year it may change based on the budget. 25% depreciation rate, based on the budget, year to year depreciation rates will keep changing. Now 15% depreciation rate block, in that block whatever is the total value, that total value will get reflected. 10% depreciation block, whatever is the total value, total cost, that will get combined under 10% block. We don't take individual assets. Once the assets are put to the block, they will lose their identity. That is income tax. We take 5% block, 10% depreciation block, 15% depreciation block. In that block, whatever assets are there, they will lose their identity. So what is the opening block value minus depreciation? What is the closing book block value? We calculate depreciation based on the percentage depreciation. We create block of assets based on the percentage. 15% block, 10% block, 5% block, 25% block. This percentage depreciation will be allocated by, which will be normally decided by year's budget. That particular year, what depreciation rates we have to apply, any changes are there. If any changes are not there, previous rates will apply. Any changes are there in the budget which is mentioned by the Ministry of Finance, Finance Minister, that new rates will apply. For that, or CBDT rules, it can be either 2 ways. Either section can be changed. Normally it will be done by Ministry of Finance. It has to go through both the houses of the parliament and budget, it will be explained. Suppose only rates will change, normally it will be given by CBDT, Central Board of Direct Taxes. Central Board of Direct Taxes will tell what are the rates to be followed. Only rates. So either it can be in the form of act. Act related means Finance Ministry will do. Only rules related means CBDT will take care. So for that particular area, what is the rate applicable? We have to see the act and rules and the budget. Any changes, if there are any, or any circulars, if any, budget or circulars. Now, So what is the difference we are talking about? One is accounting, another is income tax. For income tax, we go with block of assets concept. Block of assets, 5% block, 10% block, 15% block. In that particular block, we'll put the assets. The assets will lose their identity. Individual and assets are not there anymore. Every year, addition to the block, any disposal or sale will tell reduction from the block, net block. Addition to the block or reduction from the block, net block. Depreciation, if any, net of depreciation. Suppose there is no addition, there is no sale, there is no purchase of fixed assets, there is no sale of fixed assets, then opening value will take minus depreciation, closing block value. That is for income tax. Income tax, the word block will use. That block is based on a particular percentage. Assets will lose their identity. How many assets are there will not consider. Value of the assets minus depreciation as per the percentage, net block will consider. That is for income tax purpose. Whereas in accounting, company accounts, we go with individual assets. So here we are talking about quantity. That quantity, 40 laptops the person has purchased. For accounting, what we do, for income tax, what we do. For accounting, during fixed asset audit, the 40 laptops, each of the 40 laptops will take it separately in 40 rows under the column quantity. And not under the column quantity, all the columns will come, 40 laptops. Under the column quantity, will write 1, 1, 1, 1, 1. So 40 rows will be there. All of you got it?
Yes, sir.
So accounting purpose, what we do? Tax purpose, what we do? Jot down notes, and anyhow, this will be uploaded in our WaterBlissAir World web portal. So and YouTube also, you can revise again. Jot down notes. All of you written?
Yes, sir.
You can just jot down notes. After that, you can write in detail. Anyhow, this will be uploaded in our YouTube. So you can write in detail, listening to it again. Now let us take one more column, that is main location. So this asset is there, fine. Where? The company factory, is it in factory? Is it in godown? Is it in is it in state of Delhi, or is it in state of Mumbai? It is in state of, the company may be operating across the country. So this asset is in which location, which place? So it can be Delhi, it can be Mumbai, it can be Calcutta, it can be Bangalore, it can be Hyderabad, it can be Nagpur, Punjab, not Punjab, it is a state. So Jalandhar. So you can take a place. So the place, the district, or a town, districts, town, the place that will be mentioned in main location. Then department, we can have one more column, that is department. Now what is department? Department means where it is, whether it is in the lab, whether it is in the office, whether it is in the godown, whether it is in the warehouse of finished goods, whether it is in the godown where raw materials are kept. This fixed asset, this particular fixed asset, where it is being used, is it in testing area, or is it in lab, or is it in regular office area, or is it in sales area? Where exactly, which department this asset is in existence? This asset, is it in existence? Yes, it is in existence. Have we seen that? Yes, we have seen that. Have we verified that? Yes, we have verified that. Where is it? Which department? The department we are mentioning. Before going further, just take a minute, jot down. All of you written?
Yes, sir.
Then we can have one more column, that is vendor. Who is the vendor? Who is the seller? From whom we have purchased? Simple. The person who has from whom we have purchased. The seller's name, that is vendor. Vendor related details: name, phone number, address, any other detail that is related to vendor, which is normally required by the entity. So vendor name, vendor phone number, vendor address, all those related details will be there in vendor column. Then user. This column, what is the who is actually using this fixed asset? Suppose we have taken the example of a laptop. This laptop in this company is given to whom? Who is using this fixed asset? User related details: name, employee ID. Every employee will have an employee ID. Every employee will have a name. So name, employee ID, all those things we can have in the column user. Then we can have one more column, that is voucher number. See, all these columns can be in the need not be in the same way or same series. Each company, each entity, each software may have in different names or different methods. So same columns need not be there in every entity. We are taking a sample company, a fixed asset audit, how it is done. Now voucher name, sorry, voucher number. Now voucher number, that is nothing but purchase voucher number. We have purchased from the vendor. We have purchased. What is the purchase invoice number or purchase voucher number? That's it. This is not same as serial number. Earlier we have discussed serial number. Serial number is given by the manufacturer for the particular product or fixed asset. Voucher number is What we are talking about here is purchase voucher. We have purchased, we have got a purchase voucher or purchase invoice. That number we are talking now. So those details have to be entered. Jot down. All of you jot down.
Yes, sir.
Now PO number. We can have one more column, that is PO number. See, PO number can be first, then purchase voucher number. Columns can be varied. How the software is designed, we have to go with the design of the software which the company is using, so that barcode can be generated. We cannot interchange. Excel sheets we may be able to interchange, but again it is preferable to go with the same columns, same column headings that is given in the software used by the company. Normally fixed asset software will be used. Once upon a time it was not there. Now most of the companies are having entity specific softwares, or generic softwares may be there for fixed assets. Now we are talking about purchase order number. Purchase invoice will be there first, or purchase order will be there first. Office premises to sit, a sofa is required, or 10 chairs are required, or 100 chairs are required. Visitors will come, 100 chairs are required, office furniture. Now purchase order, straight away they can call the vendor and tell, please deliver 100 chairs. No, in companies, in large entities, processes, internal controls will be there. Just like that, purchase the office, that office premises, the manager felt that 100 chairs are required. He cannot call the vendor and say, please deliver 100 chairs to us. No, he cannot do. In any entity or a large entity or a company, processes will be there, internal controls will be there. So first, the manager, if the manager wants 100 chairs in office premises, he has to raise a request telling that we want 100 chairs. That has to be sanctioned by a higher authority. That higher authority will be in higher level management. So office, godown, warehouse, sales point, everything may come under an administrative person. That administrative person may be able to, might have to sanction. Or suppose a supervisor is there, a manager is there in office, a supervisor wants 100 chairs, so he will raise a request that has to be sanctioned by a manager or higher level manager, and sanction limits will be there. So suppose the cost is around 5 lakhs. Manager 1 can sanction. If more than 5 lakhs, 10 lakhs worth of furniture is to be purchased, then higher level person may be required, where he has to do the signature saying that yes, this is approved. So purchase order, purchase request will be there, then it will be followed by purchase order. Then the office manager or senior person will tell, please purchase this 100 quantity of chairs, or please purchase the 40 units of laptops. Then vendor they'll select, whichever vendor they'll select, whether it is to be purchased, whether HP laptop is to be purchased, or Dell laptops are to be purchased, or IBM laptop, Lenovo laptops are to purchase, whichever company they want to purchase, whichever vendor they want to purchase, whether straight from manufacturer or local distributor, depending upon the need of the hour. Many a time, large entities will go for straight from the manufacturer, and smaller entities will purchase from local distributors. So purchase order they will place. That purchase order, then vendor selection will happen from whom we have to buy. Then from the vendor they will buy. Vendor will generate a invoice. From the angle of vendor it is sales invoice. From the angle of purchaser it is purchase invoice. So purchase invoice purchase order number, they are not same. Earlier we used the word voucher number. What is voucher number? Voucher number is purchase invoice number. Voucher number we are talking about is purchase invoice number. Whereas PO number PO number, we are talking about purchase order number. First purchase order will be placed, then vendor will send the goods, will raise an invoice and send the goods. For us, it is purchase invoice. All of you write down, jot down. All of you written?
Yes, sir.
Then we can have purchase order date. Purchase order will have number, will also have a date. We are talking about purchase order date. That has to be entered in purchase order date column. Next. Bill number. Bill date. Bond number. Bond date. Many times fixed assets are imported. So when fixed assets are imported, for example, many a time laptops, desktops, even furniture for that matter, many time it is imported. So whenever there are imports, the goods or here we are talking about fixed assets. These fixed assets have to come from outside India to India. So they have to come via the ports, custom frontiers. So in the customs, they have to come to the customs. In the customs, we have customs port, custom frontier, custom station. All those words will come across in customs. So once the goods comes to the customs area, in that customs area, after payment of import duty, then only those items will be released out of the customs area. So we have purchased laptops. That laptops have the entity has purchased laptops. Those laptops have come to the port customs. Now, after payment of import duty, then only the customs authorities will release the items. That laptops what has been purchased in our example. So now, before payment of import duty, they will be customs warehouse will be there. To keep the items in a customs warehouse bond will be there. Customs godown or customs warehouse, items will be kept. Any item that has come into customs, immediately payment, everything will not happen in fraction of a second. So any item that has come into customs area, most of the time they'll be kept in customs warehouse. So when they are kept in customs warehouse, a bond will be entered. That is called warehouse bond. customs bond, customs warehouse bond. Now, in that bond, which is the product is kept in, which is that item, which is the, for example, in our example, we have taken laptops. This laptop has been kept in customs warehouse. What is the date on which it is kept? What is the bond number? So the warehouse, when the item is kept in customs warehouse, a bond will be entered. A document will be signed between two parties, which are there. One is the importer, another is the customs authorities. The bond, the document is signed between, warehouse bond or customs bond is signed between two persons. One is importer, the person who has imported, and customs authorities. We are talking about bond date, bond number. That is one column bond date, another column bond number. When the customs duty is paid, a receipt will be given. So and so date, so and so amount customs duty is paid. That is bill. We are here in this example, we are talking about the word bill refers to duty paid receipt. The receipt which mentions payment of customs duty. What is the date on which customs duty is paid? What is the number of the receipt? That is bill. We can use the word bill, we can use the word receipt, but normally we have to go with the words which are there in the software which is used by the company. Company is using a software for fixed assets. Whatever nomenclature, whatever words, whatever names the entity is using, the software is using, the same names we are mentioning here. You can call bill, you can call receipt, or whatever it is. So basically what it is talking about, when the goods comes to customs area, customs harbor or airport or customs area, it can be by flight, it will come means it will be there in the airport customs area. By ship it will come means it will be there in the harbors, port authorities. So when goods are kept in the warehouse, bond will be entered. That bond date, bond number, then when before release of items, before release of laptops in our example, duty has to be paid. So duty paid receipt, that is bill date, bill number, that has to be mentioned. All of you jot down?
Yes, sir.
All of you have written?
Yes, sir.
Now we can have one more column, that is salvage value. What is salvage value? That is scrap value. Life of the asset, 10 years. The expected life of the asset is 10 years. So expected life of the laptop is 3 years. Let us assume 3 to 5 years. Now at the end of life, what is the salvage value? Most of the cases it will be 0, or they may have some value. That means completely the asset has been depreciated. The value that is left, scrap value, that is 0. That is salvage value. Most of the cases it will be 0, or based on companies' past experiences and all, they may decide a particular salvage value. If company officials, if when we go for FA audit, fixed asset audit, if the entity will tell, take 5% as the salvage value, take 10% of the salvage value. Suppose the laptop is purchased for 1.5 lakh, or laptop is purchased for 1 lakh. Let us take an example of 1 lakh. So laptop is purchased for 1 lakh. Normally company's policy will be for this particular item or particular type of items, 5% is the salvage value. So we'll take salvage value as 5,000. Suppose salvage value is 1%, we'll take salvage value 1,000. Suppose nothing is mentioned by the company entity, then we'll take 0. So that means completely will depreciate. Here we are not talking about depreciation, we are talking about salvage value as per company's policy. If it is specifically given, we will take that. If it is not given, we will take it as 0. Jot down?
Yes, sir.
Then we can have one more column, that is physical location. What is physical location? So company to company, it may be we can have physical location, we can have sublocation, different columns. Physical location means where exactly it is put to use now. Earlier also we have used the word location. Earlier also we have used one more column that is called main location. 1 minute. So main location, let us take an example of it is in Delhi, or it is in Bangalore, or it is in Mumbai. So that is the main location. Then what is physical location? In Delhi or in Mumbai or in Hyderabad, Bangalore, wherever, physically where it is present. So let us take entire Bangalore district or entire Maharashtra, entire Mumbai, or entire Delhi. Is it in Lakshmi Nagar? Is it in South Delhi? Is it in North Delhi? Is it in Rajouri Garden, or is it in Karol Bagh? So where exactly it is in Delhi? So Delhi main location, physical location can be a particular area, or it can be in the factory, in the company premises. Company premises in is in South Delhi, company premises in North Delhi. So we have to see entity to entity, we have to decide physical location. Sublocation, whether the fixed asset, okay, now it is in Rajouri Gardens or it is in Lakshmi Nagar. Now is it in sublocation? Is it in laboratory? Is it in factory? Is it in what is that, office? Or is it in sales area? Or is it in warehouse, factory, or raw material go down? Where exactly this fixed asset sublocation? So each company will have some policies for that. So we have to identify what is being followed. As per that, we have to fill in the details. So main location, physical location, sublocation, we can have further classifications, or we may have lesser classifications. Based on the entity, we have to decide. So sublocation can be whether it is in the testing lab, factory, office, other places. Physical location can be particular area. Main location can be for entire district or entire city, something like that. So based on what the company is following, as per their requirement, we have to do it. As per the things that are being followed, regular policies, we have to fill in the columns. Write down. Written? Then the next column we can have is seat number. Seat number, cubicle number, depending upon whichever names that are given as per the software. So seat number can be this asset this laptop is being used by a particular person, which cubicle the person sits, which seat, the chair might have been, we are giving the particular number for the chair on which the person sits. That is seat number. It can be seat number, it can be cubicle number. In a cubicle, suppose 4 people sit. In a particular cubicle, 4 people sit or 2 people sit. So 2 people will have different chairs. So we are giving number to the chair on which the person sits. That is seat number. Then we can have one more column, that is PO request. That is purchase order request. Who has raised the request? Earlier we have discussed purchase order number, purchase order date. So first purchase order will be placed, then vendor will send the goods with purchase invoice. For us, it is purchase invoice. For the vendor, it is sales invoice. So purchase order, who has raised the request? The name of the person. And purchase order, any other detail as required. Then after doing all these things, when all these details are filled in the software, then software will tell you can generate the barcode now. So there will be mandatory field, there may be optional fields. Any of these columns, there may be mandatory fields, optional fields. Normally it will be mandatory fields. When you fill in all the columns of a particular row, then of or 10 items, 15 items, 100 items, 1000 items, 10,000 items, how many ever items are there, then the software will allow to generate the barcode. Until all the columns are filled, barcode is not possible to be, it is not possible to generate the barcode. So when all the columns are filled in, then barcode can be generated. So normally whatever barcode is generated, we use the word asset ID. This barcode is pasted on the fixed asset. That is called tagging. So all the details are filled in the various columns. After filling in the various columns, the software will allow to generate barcode. Once the barcode is generated, that sticker, it is printed on a sticker. That sticker will paste it on the fixed asset. That we call it as asset ID. Or we can give another number and tell this is the barcode, this is the number. That is also possible, depending upon entity to entity. Normally barcode itself will be the asset ID. So what happens with that? All the details we filled in, barcode is generated, that sticker we pasted on the particular fixed asset. The process is called tagging. Now later, whenever the entity wants to get some details on a particular fixed asset, just the barcode number it will enter, or scan that barcode number, or barcode number just it will enter where the fixed asset is there, which location, what is the voucher date, what is the serial number, what is the salvage value, bond value, purchase order number, purchase order date, physical ID, use date, voucher date, category 1, 2, cost, quantity, all the column details will be available just by referring to asset ID, just by referring to barcode. Every detail will be available. This is what we do in fixed asset audit. See, entity to entity, columns may be different, names may be different, more columns may be there, lesser columns may be there. We have taken a sample company. In a sample company, some column names, whatever is given by the software, we have taken, that we have discussed. So this is how fixed asset audit is done. So some companies, it may be taken once in a year, they may do. Some companies may do once in 3 years. Company to company, it may be different. So this is what fixed asset audit is. All of you understood?